Hey, what's going on, everybody? It is Aaron Trevino, and we have a terrific guest here. We have Aalim Bakari. He is a real estate entrepreneur. How's it going, Aalim?
Man, it is going great. And thank you so much, Aaron, for having me on your show. I'm excited. I've binge watched a bunch of your shows, so I am just honored and excited to be with you today.
Absolutely. I really appreciate that. Thank you. So, for those of us who aren't familiar with you, could you introduce yourself and tell us a bit more about you?
All right. So I am Aalim Bakari. I run a company called Victory Capital, and what Victory Capital what we do at Victory Capital, I like to say it like this: we exist for one reason and one reason only, and that is to connect investors to the capital that they need. And so I have over 30 years of real estate finance, mortgage banking, real estate investing. Uh, I've just been in the industry probably too long, so that's why. Yeah, so that's what I do.
I know that we were just talking earlier about how you had mentioned how when you work in this industry, by the end of the day, you get a little worn down.
Exactly, man. Because it's such. I am. I tend to take every deal on personally, and so it's just by like 6 o'clock, it's like, man, I'm done. I'm toast.
No, I totally get that. It can wear you down a little bit. So, could you kind of maybe explain how you got started out in real estate? Have you always been in real estate, or were you doing something else before?
So I started in the industry right out of the Navy. I've been in real estate and mortgage banking since 1984. So I worked for different banks and financial institutions. But I got my start back in 1999. I got laid off, and so my wife told me, "Hey, why don't you stop talking about being in business and go actually do something?" And so, with the challenge from her, I started a consulting company. Then I started a full blown mortgage company, and from there I started investing. I think I bought my first property probably in about 2003, and uh, and so I've been investing in around real estate, man, for a long time.
Absolutely. It seems like, sometimes we all kind of need that little nudge in the right direction.
Yes, sir. Yes, we do. Yes, we do. And it's something about when your wife challenged you. I don't want to tell your audience how she said it. I'm telling them the nice way, but she really like grabbed me in the collar and just challenged me, like, stop talking about it, go do it. And so, yeah, but,
How about that? That's
well,
real neat. Now,
yep, yep.
I'm just curious as well because I was a little kid, but what was it about the 1999 2000 that span that changed in the economy? What was going on?
So, man, I've always dreamed of being a entrepreneur, and I've always loved real estate. I tell people I'm really a transaction junkie. I just love doing real estate transactions. And so, but in '99, I'd worked for several uh, mortgage companies, and during that time they would open and close and open and close, and so I just got tired of it, and so I just decided at that point I was just going to take the leap and go out on my own.
Absolutely. There's a lot to
Yep.
be said to that.
Yes, it is. Yep.
Okay, so then after that, let's see. I'm just trying to think here. So 1999, around that time you started. So then 2003, you bought your first property.
So I bought my first property. It was a fix and flip. It's in what we would call a probably a not so good area, but I think I bought the house for like 5 grand. I put like 25,000 in it and sold it for like 75. And man, I was hooked ever since. I was hooked. So yeah, yeah.
Wow.
And then also prior to that, I'd also bought and sold notes. And so I don't know if you want to dive into that, but I started buying and selling notes, which are owner finance notes, and you can sell those on the open market too. So I've yeah.
Okay. For those of us who don't know, could you explain what a note is and what
Okay.
exactly you were doing?
Okay. So in a real estate transaction, uh, and you see financial institutions, they do it all the time. If you get a mortgage on your home, the banks have you sign a form that says that they have the right to sell the servicing or sell that loan. And so the you can sell those notes on the open market, and you could sell them for up to a percentage of what the value is of the market. And so you could sometimes get 75, 80% of the actual value of the note. So it's a way to I like this strategy because it's a great way for you to own real estate but not be involved in the day-to-day operations. And so it's you really becoming the bank. And that's a very powerful strategy. So
Absolutely. So how do you go about finding these notes?
man, there's a whole secondary market out there. I haven't done it in a long, long time, but man, there's a whole secondary market out there of individuals and corporations that have notes to sell, and I'm quite sure that they advertise, where they are. Um, I tell you, one of the things that I'm seeing now is there's companies that are actually building funds to buy notes. And so if you search, you can find several companies out there to where they will tell you the type of note that they're going to buy, and you can buy into that for, for a percentage. So
Okay. Why do you think that a lot of companies are kind of making that transition to doing that?
man, because it's to me it's the best way to own real estate because you don't have any hassles. You are investing in the paper. You're not, and the paper is tied to a hard asset such as a house or a multifamily property or some land. So it's actually what our banking institutions. It's how they make a majority of their income.
Is based off the note.
Yes, it's based off the note. That is a instrument that you can trade just like they trade on um, Wall Street.
Sure. Can you kind of walk us through maybe a
Mm-hmm.
scenario or kind of an example of, someone having a note and then you buying it?
Man, you are pulling on some old skills. So I'll give you a prime example. Say you find a house, you have money in your 401k, or you have money in a self-directed IRA, and you can go out and buy. You could buy this house for 100,000. Okay, you pay for it in cash. Now what you do is you can go out and sell that home to someone, say for 150,000, and create a note on the property that you own for 150,000. So now you are the bank to where they make monthly payments to you. And so if they can't make the payments, you are in a position just like the bank to go in and foreclose on the property, take possession of that property, and then go put it back on the the market, and you can sell it again. So that's kind of it in a brief overview.
Okay.
Yep.
Yeah,
Yep.
that was a great explanation. So, when was the last time you did a note deal?
Man, I'm telling you, that was back in the late '90s, I think. Yeah, yeah, that had to be like back in the late '90s where you actually had physical. I mean, yeah, it was not as technology driven as it is now. So, and I'm kind of showing my age too. So don't try and guess how old I am.
No worries. We'll just say there was no DocuSign back then.
Exactly. No DocuSign. No DocuSign.
Okay, so you
And no
made
internet either.
no internet. What? That's an interesting
No,
question.
yes.
What was real estate like with no internet?
Uh, I think it was easier because now it's no, it's easier now. I can't come. It's just more technology. It man, that's a good question because I've been on both sides, so I can't say, but I like both aspects of it. If we had to go back to physically signing everything and all that, that would be fine. But I think the biggest difference is it's easier to find properties to buy now than it was then. So yeah.
Fair enough.
Hmm.
So I guess that was one of your original strategies was the note buying. Around
Hmm.
that time, you mentioned how you had your flip in 2003.
Hmm.
What other sort of deals have you done along the way?
So I was doing a bunch of flips. I was doing a bunch of buying and holding, and so I did that up until 2008, 2009, and of course, what happened during that time frame, the market crashed. But the neat thing was, man, I was able to buy probably over two to $3 million worth of real estate, man, with a not so great credit, and I didn't have to come out of pocket with a lot of money because I was buying properties that I could buy under the 60 at that time. The hard money lenders, they were only financing up to 65% of the ARV, and so because I was finding those types of properties and being able to acquire them, get the funds to fix them up, I really didn't have to bring a lot of cash to closing. Matter of fact, there was several times where I got money back when I went to closing. So,
Sure. How about that? And how are you
mhm.
kind of finding these deals during that turbulent time?
Man, during that time, I had a lot of realtors that were contacting me because I also had a traditional uh, mortgage company at the time, and so I was helping them get financing for their clients to purchase homes, and then they would find out about homes that would come online, or somebody was in foreclosure, or they would find a house that was in a not so desirable area that that you could buy for a real good price. And so I I never had to go out and like hang out bandit signs or any of that. So yeah.
Sure, absolutely. So could you kind of explain a bit, kind of the mortgage business that you had while also
Mhm.
investing in real estate on the side? That was that kind of time consuming?
No, actually, it kind of just fell into place because I was doing a lot of FHA loans, FHA, VA loans. I was working with a lot of first time homeowners. And so I've always been drawn to working with investors. And so one day an investor came to me and told me that he was trying to get financing. And at that time, I wasn't doing hard money loans, but I knew of some people that were, and I kind of, put the two together. And so after watching the investors that I was helping to get loans, I said, well, since I'm helping them, I might as well, jump in it myself. So so that's how I got started, because I saw some of the checks that they were receiving and some of the checks that I was receiving. I was like, wait a minute, something's wrong here. So yeah, yeah, yeah.
Yeah, it's neat how that experience kind of bridged the gap for you a little bit.
It did. It did. It was it, it was traumatic from '09 to it was how everything just fell and crashed. It was a very traumatic event, but now I wouldn't trade that time for anything in the world, because now I see a lot of the mistakes that I made. And so that's a big push for me now, is to help investors not make the same mistakes I made. And so that was the reason I started doing some of the things that I'm doing now, is because I failed, and I fell like flat on my face. And so I don't want anyone else to have to go through what I went through.
Sure. Not that you have to go into any sort of great, detail, but just generally speaking, are there any kind of common mistakes and people can try to avoid?
Yes, man, real estate investing is a team sport. And you hear that thrown around a lot, but it's not just a cliche. It is a team sport. If you want to do it and do it well, have a team, have you an attorney, have your title company, have your CPA. And then if you're not a real estate agent, have a good real estate agent on your team. Have a good insurance company on your team. All of those things are just so important. And then also have some private investors on your team, people that have watched you do deals, and they will want to invest with you too. So man, that is great. That is so important, because I was doing deals, man, and I didn't have an attorney, I didn't have a CPA, I didn't have any of that. And it's just, and so yeah.
Absolutely. I guess it's kind of self-explanatory what the attorney, what the CPA, what the title company does, but could you kind of explain a bit more about those private investors and kind of how they fit into all of this?
Sure. So as you know, being in the field that you're in, lenders have they really pull back on the amount of leverage that they are offering with hard money loans. And so now they want skin in the game. They want investors to have anywhere from 15 to 20% skin in the game. And what skin in the game means is they want to know that you have some of your own funds invested. And so the reason you need private lenders is you have to, now I believe, people that know how to structure deals and put deals together, those are the people that's going to go on to continued success. Because if you say you found a house now, and you could get that house, say it's $100,000 house, say it's your first house, you don't have any flipping experience. So most hard money lenders may loan you 70%. They probably count on 70% with no experience. And then they're going to probably loan you probably up to 80% of the loan, the cost. And so you're going to need 20% funds in this transaction. But here's the thing though. The 20% doesn't always have to come from you. And so you have to know how, and this is where an attorney comes in. You can joint venture with someone to get the deal done. And so that's kind of a long story, but an attorney will help you draw up the joint venture, help you draw up the operating agreement and all of that. So those are the little intricacies that that a lot of these real estate gurus don't go into, but you have to know how to structure deals, especially if you're cash strapped, or if you're new, or even if you're trying to scale. So
Okay, very good. Yeah, you did a great job explaining, the investors. Could you kind of maybe elaborate a bit more on what JVing would be?
okay, okay. JV means a joint venture, and it's a legal entity that an attorney can help you draw up. And what it basically is two or three people, four or five or whatever, come together, and the operating statement, what it's going to do is it's going to show the people that's in this joint venture. Is going to outline who's doing what, and if you're the person that finds the deal, you are the deal provider. And then you can also have people that come in, say, if you want a joint venture with a contractor, well, you and the contractor draw up a JV, and the contractor will do the repairs at cost, and then y'all share in the profits. So all of that's why you need a good real estate attorney on your team, because they can show you how to structure deals and how to make sure that you're covered, and everybody's accountable for what they say that they are going to do. So
Absolutely. Just curious as well, when do you think it's a good time? How do you know when to JV on a deal and then when to not JV on a deal?
that's kind of a case by case. For a new investor, I think it would be great if they did it early on, so that they could gain experience. Because here's the thing: when you're doing your first couple of 4 or 5 deals, you have to understand you're not going to make the bulk of the money. Now, if you have your own funds, then that's something else. But now the climate is, even if you have your own funds, these hard money lenders, they still want to see experience. And so the way you gain experience is doing deals with other people who are more experienced, and you learn as you go. And so you might not make 100% of the profits, but if you could make 50% of the profits and gain a lifetime of experience, then why wouldn't you do that to gain the experience? Because it's nothing substitutes actual fix and flipping experience, new construction experience, because there's just so much to it. So
Sure, absolutely. It kind of seems like JVing is almost like the training wheels that everyone needs to ride a bike.
yep. And then if you want to scale, say you do have 10, 15, 20 single families, and you want to buy a multi-family. Well, JV with someone that has the big experience, so that you can scale. So now you have 20 or 30 single families, and then you have a 40 or 50 or 60 unit apartment complex. Now your cash flow has just been multiplied.
Sure, absolutely. So in terms of kind of I guess maybe intricacies with with the deals, what do you think the big difference is, aside from the size, but the big difference between single family and multifamily?
The biggest difference is, if you don't have systems in place, you will be exposed. I think, depending on the size of the multifamily. Now, if it's like a 4 to a 10 to 12 unit, or if it's a smaller one, then I think you can manage it yourself. I'm just a proponent of, I let professionals do what professionals do. And so I'm not trying to, as an investor, I still invest now. And what I live by is I let the professionals do what they do, and I do what I do. And I'm not trying to create another job. And that's what most investors do. They create another job because they don't have systems in place, and then they don't want to trust other people to do what they should pay other people to do. So
Absolutely. It seems like you've mentioned people and having that good team multiple times. I mean, how do you, if you're just starting out, you're starting from square one, how do you get around those good people, or how do you build that solid team you're talking about?
man, I'm gonna tell you, there's so many Facebook groups out here now, and you know, of course, we're in this COVID-19 era, but man, just talking to people, just asking people, just being a sponge, and if you see someone, if you're driving by and somebody's doing a project similar to what that you want to do, ask them who their subs are, and ask them how do they find them, and I mean, just go off of recommendations, but you're still going to have to learn though through trial and error. It's just nowhere around it, because we're dealing with people, and people are people, and things are going to happen. And so you just have to not let when you come across those bad contractors and those bad subs, don't let them discourage you. Just continue to build your network.
Yeah, absolutely. There's a lot to be said for just going in there and just doing it.
Yep, just do it, man. Just do it. I'm yeah, just do it.
Are there any other, I mean, are there any mentors you've had, or maybe any sort of books that you've read, or anything kind of struck a chord in you that helped you see a bit more clearly?
Oh man, of course, cash. I think what really I started early, so I've been a proponent of personal development for a long, long, long time, with Tony Robbins and Les Brown and all of those guys. But man, the one book that really just transformed me, or transformed my thinking, was Robert Kiyosaki's book, Rich Dad, Poor Dad, and then Cash Flow Quandary. And so after reading that book, man, I went out and I took $700, bought 8 vending machines, eight Coke machines, and I turned around and sold those 2 years later for like 25,000. And that was just like eye-opening to me. It was just eye-opening. It was just like, man, this is like, I mean, this is like the best thing since sliced bread. And so that book was a tremendous help. I'm currently right now what I'm currently focused on, man, getting I'm sharpening my skills on raising capital, because I believe any great investor has to know how to raise capital. So one of the books that I am reading right now is Raising Capital by Matt. I'm not sure if you can see that, but it's Raising Private Capital by Matt Fairclough, and this book is so good. I have it on print, and I have it on audio, and so just trying to learn, man, how to connect with people, how to build an investment team, how to present deals to investors so that they would want to invest with you. So.
Absolutely. So could you kind of maybe go through that a little bit? Capital is the money that people would use for deals, but I guess maybe if you could take a step by step, how do you generally raise capital?
Oh, well, it starts with man, having something for people to invest in. And one of the things I think the mistakes that we tend to make early on is we talk to people and we don't have an actual deal to present to them. So it starts with having a deal and spending time analyzing that deal to where you can show someone that you can give them a great return on their funds. Most people are investing in the stock market, and if they get a 4 or 5% return, they're happy. But if you could show them, hey, I can give you a 10% return in a 6-month time frame, or even in a year, most people, if they trust you and you can show them methodically how it's going to happen and make them feel comfortable, then they want to earn higher interest on their money. So that's where it starts, and then you have to do what you say. Do what you say that you're going to do, and sometimes it'll come down to make sure that your investors make money, even if you don't make as much, especially when you're trying to build your track record. So that's kind of the start of it, is going out, man, analyzing deals, finding deals, and then putting them together, knowing how to tie up a deal. And what that means is going out, if you do find a good deal, knowing how to put a contract on it with an option time on it so that you can do your analysis. And then you're also doing that time finding out if you could get some people to invest with you to put down the fund. So that's kind of a quick overview of it.
Sure. Could you kind of describe maybe the differences between using private money like this, or capital that you would raise privately, versus using a conventional bank? What are kind of the differences between those two?
The big difference is that the banks are very stringent. They have a lot of rules, and they only invest in certain markets. But with a private investor, they typically don't pull your credit. They typically trust you, the person, and then you have to pay them 12 to 14%. You may have to your first deal just to get them in, but you can typically, save money by going with a private lender. But the thing I like to do is I like to partner bank financing, hard money financing with private investors, and so that way it gives you more leverage.
Okay. Could you kind of explain a bit what leverage is and why it's important?
Yes. So what leverage is? Leverage, let's see, how can I describe it? It's the amount of money that you could get for a deal, and it's not coming out of your own pocket, if I could say it like that. Let me see if I can explain it like this. So you go to a bank or a hard money lender or a private investor, and they say, okay, I will give you 80% loan to value. So what that means is this deal is that you have somebody else that's going to provide 80% of the capital. So that's called 80% leverage. So instead of you having to come up with the whole 100%, now all you have to do is come up with the 20% capital. And so that would be an example of a deal where you are leveraged 80%. And then if you can take that 80% and then get a private investor to invest 10%, so now all you have to come out of your pocket is 10%. So now you have 90% leverage in the deal, and that's you are using someone else's capital to finance your deal.
So that's kind of the idea, is that you're leveraging your own money to be able to do more later on.
Hmm. 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 So it's like this. If you and I both had a hundred thousand, you took your 100,000 and went bought a property for 100,000. So now you have that one property for 100,000. I in turn take my 100,000 and I buy two properties where I have to put 50,000 in. So now who's in the better position?
Mhm.
I have control of two properties for the same 100,000. You have control of just one property for 100,000. I'm getting cash flow from two. You're getting cash flow from one.
Simple enough.
Was that a simple? Okay, okay.
No, that's a great explanation, because it seems like, we hear this word leverage being thrown around, but it's great that you broke it down in that manner.
Hmm. Hmm.
So what other parts of private capital, what other steps are there?
Uh, the other steps, man, goes back to what I was saying earlier. Just make sure that you have a good attorney so that they can draw up the documents, so that you can make sure that the private capital partners are secure and that they understand their portion of it, and then and make sure that the deed and all that stuff is recorded. And so you would still go through a title company just like you would normally do so, instead of the funds coming from a bank or a financial institution. It's coming from a private lender. So yeah.
Understood. Could you explain what a deed is, and what a deed being recorded would mean in this context?
So in the state of Texas, we are a non-judicial state. But I think I'm gonna explain this right. So there's two pieces of documentation on a real estate transaction that you have to sign. One is the mortgage, and that that connects the money to the property. The deed the deed conveys ownership to the person that's buying it from the person that's selling it. And so now you have a recorded interest in this property, and then they take that deed and it's recorded in the county at the county level. And so now you are the owner. You have a deed to that property, so you have ownership in that property. I hope I explained that right. It's been a long time since someone has asked me that.
No, that was perfect. All right,
Okay.
so that's recorded with the title company.
Yes, yes. So the title company actually records it, and then it's sent to the county, and the county records it in the county courthouse. And so it's on file so that people know who has the rights and privileges of that particular property.
Absolutely. So shifting gears more back to you, what are you working
Mm.
on right now?
So, man, I am working on two things. I'm working on building Victory Capital. I'm working in that area to just really come alongside investors and help them structure their deals so that they can get hard money loans. They can put private capital with them. I'm really an advisor. That's how I kind of see myself. There's a lot of hard money lenders out here. So what I'm trying to do, I help the clients that I have to navigate this financial world. And so I try to get them the best interest rate under the best scenarios that I can. So I'm building Victory Capital, still trying to establish great connections with companies and with people such as as yourself. And then, man, I'm a real estate investor at heart. And so I'm working on some deals myself right now. I'm challenging myself to move from the fix and flip arena to now I want to do new construction and new development. That has always intrigued me, and so I'm really just taking the time right now to really learn this new construction market because I want to provide. I want to in the Dallas Fort Worth area, man. It's really becoming increasingly harder to find. I don't want to say affordable housing because it gives people this bad connotation, but a great place to live that's under 300, 400,000. Because now, man, in this area, to find a good house in a good neighborhood, you're going to spend 3, 4, 500,000. And so I just believe that there's a niche that I could provide a great quality house for families in that 200 to 250,000 dollar range, and so that's what I'm working on.
That's excellent. It's definitely definitely going to be needed in the future. And it's happening all over Texas, Dallas, Houston, San Antonio, Austin. We all need that sort of housing.
Yep. Because I remember when my wife and I bought our first house in 1999, we paid $125,000 for 3,000 square feet. And man, I thought it was just the biggest thing, in the world. And now that same house, man, it's like 275, if not more. And it's like you just can't find that. And most people, if they can't go FHA, they won't be able to finance those houses. And so that's a big push that I'm working on.
Absolutely. So could you kind of explain a bit about FHA and kind of how it plays into this role?
So FHA is a federally backed loan. That means that they back the loan, and so it's for first time home buyers. Well, it's not just for first time home buyers, but you can't have 2 FHA loans at one time. And so what FHA does, it provides affordable financing to individuals. In this area, it goes up to about 415, I believe, 415,000. You only have to put down the down payment is, I think, a little under 4%. And so it gives people an opportunity to get into houses without having a lot of down payment. And then the government, there's another financing arm for people who have served in the armed services called a VA loan, and they do you can get a no down payment with the VA under certain circumstances, but it's under 4% down, and then they have a very low interest rate.
Absolutely.
Their interest rate. Yeah.
Yeah, those are definitely 2 great programs to be part of if you can.
Yeah. I don't do any owner occupied financing. I strictly though work only with investors and non-owner occupied.
Okay, fair enough. Well, Liam, is there anything that you haven't said that you'd really like to just hammer home?
Man, I'd just like to say, if you are an investor and you're on the fence, man, now is a great time to buy. Now is a great time to pull the trigger on your first deal. If you're a seasoned investor and you want to scale, this is a great time to scale. And so this is just a great opportunity. I don't want to give away too many of my secrets, but I would really look at new construction. It's not as crowded as fix and flipping is at this time, but it does bring its own set of headaches though. So yeah.
Absolutely. Yeah, it's interesting to kind of see where the new construction market will take us, given that we're in a housing shortage right now.
Exactly, man. And I'm trying to take advantage of that. And then a lot of people are moving to the suburbs, and then they're even moving to some of the smaller suburbs as well. So that's where you're going to find the land to build. So, yep.
Absolutely. Well, I'm looking forward to seeing your new construction builds. That's pretty exciting.
Man, I'm excited, and I can't wait. It's something about, man, just taking a piece of dirt and watching something just being constructed on it. So it's amazing.
That's an exciting thing. Well, we'll have to have you back on the show so we can talk about it.
Okay. All right. And if you can give me some favorable terms, I mean, we could actually make that work a lot faster.
Absolutely. Yeah. I'll see what I can do. Definitely. Well, Aalim, where can we find you? Maybe someone's watching this, they want to get a hold of you. How can we find you?
All right. You can always find me at victorycapital.com. It's VIKTORY, victorycapital.com. You can find me on Facebook at Victory Capital, VIKTORY, Victory Capital. And then I'm on LinkedIn as well as Victory Capital. So you can find me there. And then you can always, if you want to drop me an email, if you have a question, you have a scenario, you can email me at Aalim, and that's AALIM at Victory Capital, VIKTORY, victorycapital.com.
Absolutely. Thank you so much, Aalim. We really covered a lot of ground over buying notes, raising private capital, a bit about flips, new construction. You did a terrific job, and I really appreciate you coming on the show.
All right. And if I could add just one more thing too, you can also find me. I host a podcast called Emerge, the Real Estate Podcast, and it's on Stitcher and all of the other outlets. So Emerge, the Real Estate Podcast.
Emerge, the Real Estate Podcast. All right, I'll put a link in the description as well, so we can find it.
All right, sir. Sounds good. And man, thank you, Aaron, so much for the invite. Man, I am honored. I am humbled, and look forward to seeing you, and look forward to doing a lot of business with you as well.
Absolutely. Looking forward to it, Aalim. Thanks for coming.
All right, man. I appreciate it. Thank you. Bye.